Hi, gang. We're back, and I hope you're having a great Labor Day weekend. I just thought I would change pace and give you a short video. I have a good one today because I'm going to show you the original motivation and inspiration for my entire Kairos Price and Time project, which I started probably 10 or 11 years ago. And the way it started was I was asked by ICE, the Intercontinental Exchange, to do one of my Fibonacci type webinars. Some of you have heard this story before. And they wanted me to do specific charts. They wanted me to do Nat Gas, the US dollar, and the Russell 2000 E-mini. And as it turns out, I didn't have any charts on those products. So I had to do all the research. Remember, I'm the guy that did a 350 slide, 8-hour presentation at the 2008 Lifetime Achievement Awards for Dick Arms. You know that guy, the Arms Index? Well, I did everything Fibonacci that day, and I thought that Fibonacci was the end all be all. Now, several years later, I was asked to do a Fibonacci webinar, as I just stated, and when I did the research, well, I found that Fibonacci and golden spiral relationships only accounted for like 30 to 40% of all the patterns out there, if that much. And I was shocked. I was absolutely shocked. And I'm going, well, gee, if it's not Fibonacci, what could it be? Why such a gap in the rest of the market? Now, those of you who are trading Elliott Wave or trading Fibonacci or something like that, you're probably not even aware of the gap of the 60% of the market has little to do with Fibonacci golden spiral relationships. Well, actually, I was starting to get a little bored. And this was, what, 2014, 2015. And one day I was tooling around on the Great Depression chart just to see what I would find. I didn't know what I would find, but I was just playing around with it. Maybe all it required was a fresh perspective, but I was able to see all of the market in an entirely different way. Let me show you what I mean. So this is the crash leg. This is a 1929 crash. And as it turns out, the time frame is the end of August, beginning of September for the top, right where we are now. So, what I want you to take from this chart is the fact that the entire leg itself came in at a 49% drop in 49 days. Well, if you were someone like Bernard Baruch or some other smart money trader, maybe you knew that in those days because that was the end of the crash. And this is really great intel, but the fact of the matter is, I doubt a lot of people really knew what the significance of this was in those days. We do now. And that's huge because you can use percentage change in conjunction with the time element to see a beautiful square out. And so then we had something called the Happy Days Are Here Again rally. And people actually thought that it was the light at the end of the tunnel. Little did they know that the light at the end of the tunnel was an oncoming train. But the sentiment, by the time December came around, that song that we all love, Happy Days Are Here Again, came out, and that was key to identify the mass crowd psychology that was going on at the time, because B waves or second waves, if you know from your Elliott wave studies, is that their job is to replicate the pattern that came before the A wave down. So at this point in time, the Roaring Twenties, which was characterized by new technology, a technology of appliances, refrigerators, probably air conditioning, but most notably radios, because RCA was the Qualcomm of its time. So that was great technology, and people were really excited about that. I mean, the 20s were awesome. And then 1929 hit. But after the crash, they did a really good job of replicating the same psychology that happened before the bubble popped at that point at the peak. And so what I want to show you is this is the brutal bear from phase from 1930 to 1932. And it took me almost 10 years to figure this out. 8 years or whatever it was. I knew way back when that the crash hit in 49% in 49 days. But I didn't have 35 manuals or whatever it is, a 3,000 page plus playbook. It's the NFL sized playbook. I didn't have this 10 years ago. And after I did have it, a couple Labor Days ago, I don't know, it was 2 or 3 years ago, I came out with a manual called How Patterns Terminate. And then there was another one, is the secret pattern that Gartley and Elliot never showed you. Well, what they never showed you was that the first leg influences the whole, or the last leg influences the whole. And since we were at 49% in 49 days, it basically took me less than 5 minutes to figure out that the bottom was 149 weeks. Do you get it? 49 days, 49%, 149 weeks. Now, in between that, we had some very interesting calculations. And I want to show you this one. This is actually what got me interested in doing Kairos price and time for real. Because what ended up happening, as I just showed you, was the happy days are here again rally. What I never realized until I looked at this chart is that the period of November 13th, 1929 to April 16th, 1930 was 154 calendar days. No big deal, right? But the big deal came when I came to realize that the top of this rally was 155 trading days off the absolute top of 1929. So look at this symmetry. Look at this replication. We have 154 calendar days up, and we have 155 trading days from the top, and that's what ended the Happy Days Are Here Again rally. Now notice also that from the top, you have the 30. This secondary high is the 39th week, and this next secondary high to high, is 39 points. So we had this replication going on, this replication that I talk to you about every single day. What I trade with, what I do the Substack with, what I do these videos with is replication. Because replication really is one of the holy grails of the market. And it's right here, almost 100 years ago. 39 weeks, next high, 39 points. I think that's pretty cool, don't you? So let's look at some of this replication because there's more. Okay? Check this leg out. The high here is 119.15. So it's 119. This hits on the 228 DG vibrational day of the year. Next high is 109 is from 228 to 347. That's the 347 DG day of the year. The high is 119. The difference is 119 degrees. And here's the coup de grace. As I already showed you, the first leg down was 49% in 49 days. The entire leg is roughly 149 weeks. The last leg of the entire pattern, a pattern that was down 89%, last high before the bottom, price point 89, right? But the significance is that the range of the last leg is 49.31 points. So the lesson and one of the takeaways that you should have is being aware of the numbers on the chart and being creative to see how they replicate, because these are the best and most precise indicators in the market. They really are. And the truth of the matter is 99% of people who engage the markets have no idea this exists. Now you do. Okay, so we covered the 29 crash, right? So the next question was, well, gee, that was 100 years ago. Does it have any application to what we're doing right here in the 21st century? Well, originally, I started trying this out on 1 minute charts and had success and saw that it worked. Back in the day, I did a paid newsletter, and so I covered the gold market, and this is what I found. This was June 2016. So I'm dating myself. This is now a little over 9 years ago when I really first got serious about this. And why did I get serious about it? Because I wanted to test it and see if this worked. What I found on the Great Depression chart, if it was applicable to what we're doing. So here you go. We have a 36-hour pullback to a price of 1236. And I thought, well, gee, that's really interesting. That's a nice little square out. What does it really mean? Look what happened. This is a monster rally leg. When I saw this, I was hooked. I was hooked for good. It's 10 years later. Look what we developed from this. Look how many of you are learning how to do this stuff. This was the motivation right here. So let me just share with you. For those of you who are coming here and looking at my work for the first time, these are very simple concepts, but it's not easy because it requires your due diligence and diligent practice to track it and figure out when these things are lining up. But I'm here to tell you the water's warm. Come on in. This stuff is great. It's the most precise technical analysis, whatever you want to call it, that you'll see anywhere. So please visit the beyondthegoldenspiral.com. There's plenty of free content. We have tons of manuals and we have training, and there is a coupon code. When you get to the shopping cart, use first order for 10% off. Finally, our standard disclaimer: trading and futures trading is not for anyone. Viewing or purchasing of any of our content constitutes you agree with this notice and exempts the author, his agents, and distributors from any liability and or litigation. Okay, gang, we'll see you on the next video.